Will your family be taken care of if the worst happens? Hi, I'm Prof. Stacy the Money Teacher, and welcome to my classroom.
Got no money on my mind, got no money on my mind, got no money on my mind.
Today, let's talk about life insurance. I know that many people have strong emotional feelings about life insurance, but today, let's focus on the practical aspects. First, let's get one thing straight. Insurance companies make money on life insurance policies. So when it comes to purchasing life insurance, you want to find the right amount of coverage to purchase, which might be none. Life insurance isn't how you leave a legacy. It's too expensive. Life insurance is to replace your income should you pass for the people or children who depend on it for their financial stability. If you're single without anyone depending on your income to survive, you probably don't need life insurance. If you're married but the kids have moved out and your significant other has income of their own, you probably don't need life insurance. If you owe money without any co-signers, you probably don't need life insurance. Your debt doesn't jump over onto someone else unless they signed on that debt. So, who does need life insurance? Well, if you have debt with a co-signer on the loan, you may want a life insurance policy equal to the amount of the debt and payable to the co-signer. That way, if you pass, they can use the insurance policy proceeds to free themselves from the debt. If you owe more than the value of your assets, but you have a particular asset that you want to pass on to someone, you may want to purchase life insurance to pay off your debts. That way, your assets aren't sold to pay your creditors. But the last and the most common reason you need life insurance is if you have a family that's relying on your income. Maybe one parent's a stay-at-home parent. Maybe both of you work. Maybe there's no kids. But if there's someone who's relying on your income, life insurance is a good way to replace your income in case you... So how much should the policy be for? I recommend 10 to 12 times your annual salary. Why do I say that? If your loved one received that amount in a lump sum, they could invest it in a well-diversified mutual fund, which would earn approximately 7% per year on average over a long period of time. Therefore, they would be able to replace your income each month while not touching the principal. What about you stay-at-home parents? No one's relying on your income, right? Actually, it may be even more important to have life insurance for you because for your spouse to continue working in the event of your death, someone would have to do all the work you're doing. Cooking, cleaning, shopping, raising kids, chauffeuring kids around, all of it. Calculate how much your family would need in order to hire out that work for a year and multiply that amount times 10 or 12 times to estimate the life insurance value that you need. And you can use that number when your partner implies that your job is easy. Okay, so we've determined that you need life insurance, but how do you pick one? There's basically two types of life insurance: term life insurance and life insurance with a savings component. Term life insurance is straight up insurance, like your car insurance. You pay your premiums and you hope you never need to make a claim. You choose the length or the term of your policy based on how long you think you're going to need it. 10 years, 20 years, or 30 years are common. This is the type of life insurance that I recommend. It's pure insurance and it has the lowest cost per dollar of benefit. The other type of life insurance with a savings component, has many different names: whole life insurance, variable life insurance, permanent life insurance, universal life, lots of different names. In my experience, the cost of the insurance part of these policies is much higher than the same amount of term life insurance. And the return on the savings part of the policies is much lower than you can get at a regular bank. Lose, lose. Many times these policies are marketed as life insurance policies you can keep for your whole life. However, you don't need life insurance for your whole life. Once you're out of debt, your kids are grown and gone, and you've paid off your house, you probably don't need life insurance anymore. So term life insurance is really the way to go. Think about how long it'll take for your situation to change. You're in debt? A 10-year policy might be more than enough. You just had a baby? 20 years would probably be better. Okay. You need life insurance. You've chosen the right length of time. You've calculated how much. Now you need to apply for it. When you apply for life insurance, you'll need to complete a health questionnaire and possibly undergo a medical exam. The insurance company wants to make sure that you're in good health and not likely to die during the term of their policy. If you have a pre-existing medical condition, you may still be able to obtain life insurance, but the premiums will probably be higher. The insurance company may also exclude coverage for certain conditions or decline to insure you altogether. Don't assume you can't get life insurance if you have a pre-existing condition, but do expect to pay more for coverage and price around several insurance companies. And while that policy is in place, your goal is to work towards being self-insured. Make a plan to build up a nest egg that can replace your policy when it expires. Invest that nest egg well and let it grow. It's a much better way to take care of your loved ones in the long run. Did I answer all your questions about life insurance? Let me know in the comments and follow me for the next video on insurance that you may or may not need.